All right, we are looking at markets. Not all U.S. markets are at all-time highs, but the Dow Jones Industrial Average is 30 minutes until the start of trading. I'm Matt Miller.
And I'm Dani Berger. Bloomberg Open Interest starts right now.
Coming up, Nvidia says production of its next-gen AI chip is on track, but there's competition in the wings. We are live from CES in Las Vegas.
And the bull market, it's alive and well despite mounting geopolitical risks in Venezuela, Greenland, and Taiwan.
Plus, hedge funds with stock-picking strategies had a stellar 2025. Bloomberg crunched the numbers.
I'm starting with something more unusual for us, which I think you're to blame with this.
I'm behind this.
And I will accept that.
To some extent. Yeah. Actually, Sarah Mazzulli suggested this, our producer, and I said, great idea, Sarah.
Well, the idea is to start with commodities,
yes.
And it is a great idea because that has been the concentration of moves. Oil fell yesterday after the action over the weekend in Venezuela, and then it ended up gaining 1.6% because maybe there's actually disruption in Venezuela. That means you have to look for other sources of oil, especially if you're China. Copper, that trades at a fresh new high, up 2%. Gold, that also looks steady. Silver also high, too, as traders look beyond Venezuela, but also it's that continued trade of precious metals being the hedge.
All right, let's look at digital gold, shall we? And I'm not talking about Bitcoin here. I'm talking, of course, about these chips. Nvidia shares rising after the CEO, Jensen Huang, said demand for its new Rubin chips is strong, as well as demand for the lower-level H200 chips that they're allowed to sell to China, which have been submitted for licenses. So we're following that story. Huang, of course, speaking, Dani, at CES.
Yeah, looking forward to also more conversations from Jensen Huang, Lisa Su, with the Bloomberg tech team. And Huang announced a slate of new products at CES in Vegas, including one for autonomous vehicles.
The amount of computation necessary for AI is skyrocketing. Vera Rubin is in full production. We're announcing Alpamayo, the world's first thinking, reasoning, autonomous vehicle AI.
It's a lot to keep track of, and doing so is Bloomberg Tech co-host Ed Ludlow, who's in Vegas for CES and joins us now. Ed, what did you make of the announcement from Jensen Huang and Nvidia?
Yeah, I mean, the main news headline probably is that Vera Rubin is in full production. And in some ways, that's actually just them reiterating what they said in August and then in November. But it is important because, firstly, the prior generation Blackwell system encountered some production hiccups when they were ramping. So the market's, it's modestly higher, but it's a kind of an assurance that that generation to generation jump might go a little bit more smoothly. But another reason that we kind of care about it is that each year, NVIDIA commits to a new generation of compute platform. And for NVIDIA, every time they do that jump, they actually own more of the server design. They have their hands in more components. As a percentage, NVIDIA accounts for more of it. And on paper, that's positive, right, for margins in the future. And for those that use it, be it Microsoft, OpenAI, every time there's a jump each year, it basically lowers the cost of running a model significantly by a factor of 10 or something like that. And so it is important that that stays on track.
I hear you're going to sit down with Lisa Su of AMD right at the top of your program, special coverage from CES in Las Vegas. Ed, and I think a really fascinating interview because she came here from Taiwan when she was 3 years old and became one of the most vaunted leaders in the technology space. What do you want to get from her?
Yeah, like AMD is fighting. They're fighting hard to get a foothold in a market that, frankly, NVIDIA still dominates, which is accelerator cards or GPUs that go into data center. What's interesting about what AMD is doing is that it's a slightly different approach based on their focus at CES. NVIDIA still gets most of its sales with the hyperscalers, right? The big cloud computing companies. This latest generation of AI card that AMD has is targeted more at like on-prem, smaller data centers that companies control themselves, largely focused on inference, running AI models locally at the edge for the things that are needed. So I'm kind of interested, like, why? Is that you kind of conceding that the bigger market training and higher end inference isn't for you? Or is this just something a bit incremental that they're doing? And AMD is also important in PC. And like everyone is obsessed with data centers. And as you know, I'm obsessed with data centers. It's important. But the PC market in 2026 is so interesting. And we might learn a little bit more about the health of that market through AMD rather than Nvidia.
All right, Ed, very, very much looking forward to this coverage today. Bloomberg Tech's Ed Ludlow reporting live from CES in Las Vegas, arguably the most important conference on tech and nowadays on cars as well. Ed is going to speak with a number of the world's top AI CEOs throughout the day. As I said, starts at 11 o'clock with AMD CEO Lisa Su. Let's turn, though, now to geopolitics as Delcy Rodriguez is sworn in as the new Venezuelan president. White House Deputy Chief of Staff Stephen Miller made it clear who is running the country.
We have an oil embargo in Venezuela. For them to do any kind of commerce, they need our permission. We have our massive fleet, our armada, still present there. This is an active and ongoing U.S. government military operation. And so, of course, we set the terms and conditions.
Joining us from Washington is Bloomberg's Washington correspondent Tyler Kendall. President Trump has made it clear that if she doesn't do what he wants, she could face worse consequences than Maduro. How does Washington receive this news that we're running a narco-terrorist regime via coercion?
Well, Matt, there's been mixed reviews, of course, particularly on Capitol Hill, as many Republicans have broadly applauded the move by the Trump administration. But questions have been raised about how they went about executing this operation and ultimate mission. At the same time, this White House is trying to thread the needle. It depends on who you're listening to, whether it is the White House senior advisor Stephen Miller or Secretary of State Marko Rubio, about what the ultimate end goals are going to be. But it is clear that there is an emphasis here, particularly from President Trump, that the White House feels that Venezuela needs to get on more solid economic footing before there can be a transition to democracy. In fact, President Trump uses the words like fix the Venezuelan economy through oil revenues before he says that they can even talk about setting a date for potential elections. And that has raised questions. And it has also caused our own analysts at Bloomberg Economics to say that that raises the risk that there will be a delay in a democratic transition. It is very clear that that is where the emphasis is, as Bloomberg News can now confirm that the U.S. Energy Secretary Christopher Wright is set to court and meet with U.S. oil executives later this week. People familiar with the matter telling us that he will meet with executives on the sidelines of an energy conference happening in Miami, because Matt and Dani, at this point, this White House is really banking on some big investment announcements in order to execute their plans for Venezuela going forward.
Tyler, thank you very much for your coverage on this developing story. Bloomberg's Tyler Kendall reporting from Washington. Now, staying on this theme, there will be a resurgence of interest for oil companies to go back into Venezuela if, and it's a big if, the political situation stabilizes. But Ben Lucklock, Trafigura Global Head of Oil, says don't expect oil to start flowing immediately.
Don't expect extra barrels to come quickly. You are talking a multi-year process, billions of dollars. Can they get back to their 3 million barrels a day? That will take years, 10, 15, hundreds of billions of dollars to get there. Do I think there's likely to be a resurgence in interest from the majors to go back to Venezuela and really produce, assuming that the stability remains? Absolutely.
Joining us now is Mike McGlone, Senior Commodity Strategist at Bloomberg Intelligence. Mike, one of the more interesting facets in this conversation is something that Trump added to the picture yesterday, saying that the U.S. government may reimburse oil companies for building Venezuela's infrastructure. Are we about to witness a U.S. subsidized rebuild of Venezuela? And if so, what does that outlook appear to be?
Well, obviously, that's somewhat subjective, Dani, but it's the trend towards this whole America is becoming much more of a price maker than a price taker. Our colleague Javier Blas pointed out that now the U.S. is controlling close to 40% of total oil reserves. So I published today how, if just to include the U.S. and Canada alone, we have a net surplus of crude oil and liquid fuels around 8 million barrels a day. You add into that Mexico and Argentina and Guyana and Venezuela, you see that massive shift in the global world order towards the America is becoming an excess supplier of crude oil. The key thing I want to point out is it's kind of meh. It's known. Crude oil's in a bear market. It's stuck. It's heading towards the lower end of range. maybe into the 40s. But what's really happening this year is natural gas has dropped about 10%. No one's really talking about that, but it's just the trend in energy prices going lower, and I think this is going to add to that trend. It's what Mr. Trump wants.
Mike, let me ask you about something we heard from Ed Morris yesterday, or rather, he told Tom Keene on Bloomberg Surveillance that we need to get rid of the Jones Act. And not a lot of people outside of commodities think about this, but it entails either allowing ships that weren't built in the U.S. to transport oil, or building, I guess, if we don't get rid of it, more ships in the U.S. How do you think that would affect pricing?
Yes, that's part of it, man. I think it's just more peripheral. That will be worked out, particularly when it comes to incentive of money. The U.S. has to export its natural gas, its crude oil, its corn, its soybeans, and we have an excess of, we have a superabundance of these commodities, which is wonderful. And in the dollar's weakening a little bit, but it's all the above. But the key thing is, from a standpoint, is if we don't find ways to ship more of it, the surplus builds and price pressure continues downward.
All right, Mike, thanks very much. Mike McGlone there of Bloomberg Intelligence, focused hard right now on oil, gold, and copper. Quick check on what's going on in equity index futures. We're looking at S&P futures really unchanged here, actually across the board. I mean, with the exception of the small caps, Dani, not much of a move. President Trump tweeting out earlier that all of the U.S. markets, all of them, hit all-time highs, and I think he meant, you know, recently, like in the last quarter, which is the case.
I would say because only recently the Dow has hit a new time high because of Goldman Sachs, basically, in financial companies doing well. But yeah, we're still just under 1%.
The NASDAQ in October.
Yeah.
And
but we're almost at a new high for the S&P, just less than 1% away.
Yeah, just a couple weeks ago.
So President Trump maybe isn't wrong. He's just early. Coming up, we continue the conversation on Venezuela with Marko Papic, BCA research macro and geopolitical strategist. That's coming up next on Bloomberg Open Interest.
Let's get to high interest now. Look at what's making headlines around the world. European leaders are backing Denmark after President Trump renewed threats to seize Greenland. France, Germany, and the UK, as well as others, warning that borders are non-negotiable and Arctic security must be handled through NATO. They stressed Greenland falls under NATO's collective defense and its future can only be decided by Denmark and Greenland itself and not the U.S. Marvell Technologies is buying XCon Technologies for about $540 million to strengthen its AI data center switching business. The deal would add technology that helps link many AI chips together, letting them work as one bigger, more powerful system. The acquisition is expected to close in early 2026. And Wall Street is entering 2026 with confidence, but strategists are warning that complacency may be dangerous. Trade tensions, sticky inflation, high rates, uncertain AI profits, and fresh geopolitical shocks are piling up. And despite muted volatility, some strategists say investors are underestimating macro risks after years, Dani, of strong gains.
Yeah, you could have said that last year, and we still gained in 2025. So
True.
I don't know what to make of
Why
that.
diversify?
Yeah, true. I guess international equities did better than the U.S. Let's get more on those geopolitical risks and where and how you should be thinking about them. Joining us now is Marko Papic, macro and global strategist at BCA Research, the author of Geopolitical Alpha. Marko, this is what you do day in and day out. And typically, the saying for Wall Street goes that geopolitics has little of an effect. And we've seen that in recent days. But if this is a global scramble that we're witnessing for resources, for supply chains, should they be thinking about this time differently?
I think that they should be thinking about the age of empires premium. And what I'm referring there to is a popular computer game where you send out little villagers to cut your timber and mine for gold. Because that appears to be the world that President Trump announced over the weekend. The United States needs Greenland. But why? You can just mine the commodities that are in Greenland and then sell them and buy them on the open market. That's at least what's worked for 30 years. By articulating the need for natural resources in such a stark manner, President Trump has effectively fired a starter pistol on a race for natural resources around the world. And I think that that's really the third derivative of this Venezuela attack we should be focusing on. As a result, I think that one of the strongest gains in 2026 could be the increase in prices for industrial metals. Not so much oil prices, but really industrial metals, because investors could front run this scramble where you see many countries start to hoard it in anticipation of this new way to think about the world.
Are you worried, Marko, in that case, that other great powers start grabbing leaders, even those that they deem illegitimate, and taking territory?
It's not so much about regime change. It's really about sequestering really critical supplies of minerals, of natural resources into non-tradable spheres of influence. I mean, that's what this is really about. Venezuelan oil has to be our oil. Greenland's rare earths have to be America's rare earths. And so that's really what I'm more focused on. It's the fact that natural resources that were for the past 30 years easily tradable on the international market suddenly become sequestered in non-tradable zones of spheres of influence.
Well, we've started to see that, for example, with copper, right? There's this huge U.S. hoard taking place with some of these critical mining materials. But Marko, a big hand that has to be played is China and their access to rare earth minerals. We've seen China play that hand when negotiations get tough with the U.S. Just how big of a factor is that going to be in 2026 as this global scramble happens?
Yeah, so China really did this way before anyone else, back in 2010 and 11, with the dispute with Japan over the Senkaku Islands. So this is really nothing new, and China has been hoarding and it's had a strategic reserve for many commodities for a very long time. This is just the application of the Chinese approach to commodity hoarding, but global. And President Trump appears to be comfortable with that kind of a world. So yes, I do think that this is something where rare earths play a critical role, but rare earths are difficult for just regular investors to invest in. I think it's much broader than that. This applies to all commodities, whether it's copper, whether it's zinc, whether it's nickel. And I think that that's what's interesting about where we are right now. 2025, you mentioned, Dani, that 2025 was an interesting year. It was. All the macroeconomic fundamentals told you should have been short copper. You should have been short industrial metals. Things did not look great in China at all. And yet these commodities went up. So I think that the market has already been sniffing this out for some time.
I wonder, I was listening to Ricardo Hausmann on Bloomberg Surveillance this morning, he of the Harvard Kennedy School. He argues that you need to have first, a stable democracy and the people behind you before you can develop these economic assets. That's what he teaches at Harvard, economic development. Do you think that's the case? I mean, do we see that in the example that that China's laid out?
I think that's absolutely not the case, but, I'm not a Harvard professor, so maybe I could be wrong. What I would say, however, is that in the case of Venezuela, in the particular case of Venezuela and its oil reserves, I do think that some of the initial analysis about this regime change that President Trump has endeavored upon was a little bit overly optimistic. And we saw the market action yesterday. The market dismissed the notion that we're going to be swimming in Venezuelan oil anytime soon. Oil prices actually went up. So I do think that when it comes to Venezuela itself, the regime has been unable to boost production. So whether or not the U.S. can really help the regime now, extract more oil is up for a debate. I do think some American enterprises are likely to benefit. But I think from a global supply perspective, many of the initial enthusiasm front ran something that's going to take a long time.
And Trump did say yesterday that the U.S. government may reimburse oil companies who go into Venezuela to rebuild. Marko, it seems like a real willingness from this White House, whether we see that or not, but to spend in Latin America, be it with Venezuela and oil or in Argentina. The bond market didn't react to any of that. Should we start to think more about government deficits when it comes to some of this nation building and resource hoarding that the U.S. might embark on?
I'm not sure, Dani. I think that a lot of it can be done cheaply. So 50 billion here, 100 billion there is not going to really matter for the U.S. bond market. It's really, I would start selling bonds, and I would be worried about fiscal premium if the U.S. engages in the sort of nation building the U.S. did in the Middle East. We're talking trillions of dollars. But the administration and many of its allies over the weekend have clearly walked back this notion that the U.S. will be trying to turn Venezuela into Wisconsin, which is a very expensive endeavor. So that doesn't seem to be what's going on. It's more like supporting Venezuelan oil industry. It's supporting the Argentinian FX. It's not wide scale, like let's go in there and actually like perform plumbing on people's homes while we're rebuilding a country. That's not what seems to be happening.
Marko, in reading through your research, I see you have assigned a low probability that Taiwan is next, which I guess is reassuring. It may be, in your take, is it may be that Cuba falls next, but it's not really consequential for markets. Iran is really interesting. I saw betting odds that there's a 46% chance now that the Ayatollah has to flee Iran by the end of 2026, which is not insignificant. What do you think about the situation there?
That's it. That's why oil prices went up, because whatever prospects of future oil supply coming out of Venezuela, and remember, Venezuela's never really more than just doubled its current production. So you're looking at maybe at best an extra 1 million barrels a day over the next 2 years. Yay. That's not exciting. But what is exciting for oil prices is the potential rinse-repeat action of what we saw over the weekend in other countries. And no, not Cuba, it's really Iran. Iran is really the one that we need to watch for. There's a lot of chatter about the U.S. Getting encouraged by how absolutely extraordinarily successful this operation was in applying it to a place like Iran. President Trump did mention a couple of weeks ago, so over the Christmas and New Year break, that he would intervene if Iran continues to suppress protests, which are ongoing. So when you put that together with what happened in Caracas, you start thinking, okay, well, that would be an existential threat to the Iranian regime. Unlike the actual attacks by Israel and the U.S. last year, where President Trump was very careful to say that he was not interested in regime change. I do think that...
I'm sorry to cut you off, Marko. We had to run to a commercial break, but it's been fascinating. I hope we can get you back on soon. Marko Papic there of BCA Research. This is Bloomberg. We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. Looking at futures that are fairly little changed, S&P futures at least, very little changed here. NASDAQ futures climbing a little. We don't have the Dow Jones Industrial Average. I'm going to make sure to bring it up for you at some point because we did hit an all-time high on the DJIA on Indu Index yesterday. You see and hear the opening bell there on the New York Stock Exchange. Tortoise Capital ringing the bell. I guess it's an MLP that believes slow and steady wins the race. And then down on the NASDAQ, you've got Helus Pharma ringing the opening bell. Brought the whole family, which is always exciting. It's a milestone. It's a bucket list. Have you ever run an opening or a closing bell?
I have not. I'm going to guess you have. I don't know. It feels right. Have you?
I have not. No. Oh. I've been on the podium and I've rung the bell, but it wasn't for the open or the close. It was just like a photo op.
Would you bring the kids?
Absolutely.
Yeah. You got to bring the whole family.
150%.
Yeah. I like that idea. Matt, I'm looking at some of the stocks that are moving here at the open. One of them is Vistra. Shares are up 3 1/3%. They're going to pay about $4 billion. With that, they're going to get 10 natural gas-fired power plants in the Northeast and Texas. The idea, help power AI data centers. So we are still in this realm that if you make an AI announcement, congratulations, your shares rally, Matt.
All right, Nvidia, speaking of an AI announcement, put forth a slate of new products, including tools designed specifically for autonomous vehicles. The CEO, Jensen Huang, joins Bloomberg at 1 p.m. Eastern. Wow, the godfather of AI. I wonder if he's going to wear his black leather jacket.
Something will be wrong if he's not.
Yeah.
I like his alligator skin one. I hope he wears that personally.
Is it Tom Ford, I think? I'm not sure.
If it's Tom Ford, it's like $10,000, so good for him.
It is very expensive, but it costs less than one of his Blackwell chips. Now Vera Rubin, I'm sure.
Good point.
Joining us now is Principal Asset Management Chief Global Strategist Seema Shah. Seema, great to have you on. There's so much breathlessness, news around the removal of Nicolas Maduro from Venezuela, but it doesn't seem to have affected markets that much. How do you see it?
Hi, happy New Year, Matt and Dani. I think the market is getting it right. Typically, although it's obviously a very big headline. You rarely actually see that geopolitical events have a sustained impact on markets. Really, for that to happen, it needs to impact the fundamentals or maybe a narrative which is already in play. And so if you look back at previous ones where you have had a sustained market impact, it's probably because it's really hit oil prices, and then that's led to a surge in inflation, particularly if there is an elevated inflation backdrop. We don't have that right now. We've seen that the oil prices haven't really reacted as probably many people would have anticipated. And to us, this is more of a long-term story. It's something certainly to watch, but it's not going to be market moving, at least in the near term.
So in the meantime, we're trading just under all-time highs, Seema. And if you're the Dow, as Matt's been pointing out, you are trading at a new all-time high. For 2026, though, are we going to see another year where U.S. stocks trail international equity? Or is it one where the catch-up trade has happened and it's unlikely to repeat this year?
So we're still in the camp that you should see the US market outperform, but by quite a small margin. We do think that there's a lot of opportunity within and across international markets, and actually across the whole asset allocation space. Specifically, I think Europe and Asia can really solve for a lot of things that investors are looking for. If you think about Asia, people want to still have exposure to technology, but they want something which is slightly cheaper valuations. And we know that parts of Asia are very much ahead in terms of tech innovation and AI adoption, of course. So that tends to be an area that we're seeing a lot of interest. The other side of it is, of course, is Europe, where you don't have as much exposure to AI within the specific tech companies in there. But of course, AI adoption is key. There are some really good players. But Europe does provide some diversification. So if you were to have some concerns about the AI narrative that there could be maybe a weaker performance this year, then Europe tends to solve for that. So I think there's lots of opportunities. And then, of course, layer on top of all of that, that you still need to have strong fundamentals. And we're seeing that, for China, the economic story seems like it's improving. And certainly for Europe, with the advent of all this fiscal stimulus in play, we're expecting a stronger growth story. So on both sides, I think there are opportunities. It's just that when we're looking through the US growth story, and of course, the fact that it's still the leader in tech, we do think that's going to edge it forward a little bit more than the others.
Was it AI that drove these gains? If you take a look at President Trump's tweet this morning, he claims all of the U.S. markets are at an all-time high, just hit. And thank you, Mr. Tariff. Is it not, Seema, the tariffs that have driven us to these gains? And if so, why have other markets outperformed the U.S.? They don't have the same kind of tariffs on.
So I guess I wouldn't allocate the performance to tariffs. I think one of the things that you did see last year is that tariffs were not as high as many people had feared. And then that did result in this boost in confidence, and it helped the macro story be a little bit stronger. And certainly the same thing for international markets. The fact that tariffs were lower than feared also helped them move forward too. Now, to the point around it not just being a tech story, I think that is correct. I think we're expecting to see this broadening out in this very strong performance. We've already seen some parts of the market, across from financials to segments of industrials, do pretty well. We're expecting that to continue. And then also there's consumer discretionary, which in the first quarter of this year, as you start to see that fiscal stimulus flow through to households, that also has some good opportunities ahead. So it's not just about tech. We think that may still be the leader for this year, but we do think that there's a broadening out to other sectors, other parts of the market that can also do well.
We've been waiting for that.
Yeah, we've been waiting for it. Lots of people have been calling for it. There's been many false dawns, Seema. But what has changed already heading into this year is the market's willingness to bid up everything AI. That's not exactly what's happening. And in fact, the market has been punishing players who can't fund their AI investments on cash flow. If you're using debt, there's more skepticism applied to it. Seema, is it a cooling of the AI euphoria that we're starting to witness?
Yeah, that's exactly the right words I think I was going to use. It's a cooling of the AI euphoria. It's not necessarily a negativity, which is starting to weigh in, but you're seeing that investors are starting to differentiate between the ones within the tech space. To your point, which ones are going to be cash-driven, which ones are having to go to the debt market. So we are expecting to see more focus on things like earnings growth, what is the cash flow, generally, how is the performance of these companies and what are their plans going forward, rather than just being a blanket, very, very strong performance across tech companies.
Hey, Seema, we're going to have to end it there. Thank you so much for joining us this morning. That's Principal's Seema Shah. All right, about 7 minutes into your trading day, a check on markets this morning. and we are inching up towards new highs. We're less than 1%. I think it's something like at the close yesterday, 0.6% away from all-time highs. Will we get there this morning? Not a very strong performance, about an even amount of stocks trading up as down. Nvidia leads the pack this morning, up 1.2% after many CES announcements from Rubin on trajectory to get out there along with autonomous vehicles. Alphabet, Micron, Amazon, Alphabet also at the top of the pile when it comes to contribution to the gains for the S&P. On the downside, Apple having another tough day. Those shares down 1.1%. Tesla shares are down 2.6%. I think there are some bad general EV sales out today, Matt. Is that right? You would know this more than me.
EV sales are slowing to the point of potentially shrinking, potentially falling. So
okay. That's not good.
I think the total car sales, Cox estimated a 2% gain 2025 over 2024, which is not huge.
So that's bad. And producer Will points out that you also have Nvidia coming into the game with autonomous vehicles. So that's also probably bad for Tesla. Looking at some of the sectors that are moving today, too. Yesterday it was about oil, energy, and commodities. Energy, the worst performer. So some of that reverses down 0.5% at the top of the pile. Healthcare, materials, utilities, staples. So yeah, we are higher, but it's the safety sectors that seem to be carrying us there. Financials are also down after hitting a new record yesterday ahead of bank earnings next week, Matt.
All right, a lot going on, and I'm glad that some of it's centered around cars. Will be interesting to see that Nvidia. It's not that they're going to make a car, right? They have a system that could rival that of Tesla. We'll continue to report on this, and Ed Ludlow is going to be focused on it in the next hour or in an hour and a half. Out of Las Vegas, out of CES. Hedge fund returns are starting to roll in for 2025. We'll take a look at that data next. How well have they done versus just buy and hold on the S&P? This is Bloomberg.
About 10 minutes into your trading day, going a whole lot of nowhere. S&P little change, but nearing an all-time high. NASDAQ also up just 0.1% as the Russell 2000 index dips into the red, down 0.1. Let's get you some of the top calls this morning, the analysts and what they have to say about individual stocks. First up, Baird, they're getting downgraded. They're downgrading rather Wells Fargo, Key Corp to sell, saying that the recent bank rally has left valuation stretched with little upside left. They also see risk-reward turning unfavorable and say that there are not many catalysts on the horizon. Key Corp down 0.4%. Next up, Evercore ISI, they downgrade Halliburton, citing heavy U.S. exposure as North American activity slows. The firm says that Halliburton may need to cut that exposure to protect margins, even at the expense of revenue. Finally, wrapping things up with Wall Street generally upbeat on AMD after its CES chip debut. JP Morgan says that management struck a confident tone on long-term demand. Morgan Stanley says that customer feedback suggests that AMD's product base is gaining traction. And just a programming note that AMD chair and CEO Lisa Su will join Bloomberg Technology at 11 a.m. New York time, sitting down with Ed Ludlow and gang in Las Vegas, Matt.
Yeah, and then Jensen Huang is going to join them as well at 1 p.m. So massive lineup out of CES for Ed, Caroline, and Bloomberg Tech. We are getting a clearer picture on hedge fund returns in 2025. Light Street Capital outperformed other stock-picking hedge funds, soaring more than 37% last year. For more, we welcome Bloomberg's hedge fund reporter, Hema Parmar. Hema, so a number of funds have done very well. We're going to kick it off with Light Street. They essentially doubled the gains on the S&P, which I know is not their benchmark, but
still, they're a stock-picking fund, so it's not, beyond the realm of imagination to see how they do compared to the S&P. Up 37%, this hedge fund is. Their third year of steady gains. Strong numbers, and really importantly, they've actually crossed their high watermark after a really difficult 21 and 22. They've made up those pretty bad losses from 22 and 21, made investors whole, and added to that. So any LPs that were in that now happy. 3 years is not a bad amount of time to have made up a loss which was over 50%.
Speaking of really good gains, one of the stories this week that gained a lot of traction from the hedge fund team is Michael Platt's Blue Crest. you must feel horrible if you were one of those clients who had to get your money back from Blue Crest, because now client free, up 73% last year. Huge returns.
Amazing. When you don't have to deal with external investors, you can take all the leverage you want. You can be riskier. You can be more concentrated. You can invest in things that are capacity constrained, where you can put a small amount of money to work, but really pocket all that gain. So there are great benefits to being a family office. And you see that in the returns, up 73%. Very impressive.
Yeah, and what, like 7,000% since they went
absolutely
private. So Michael Platt is killing it.
Yeah.
It's not the case for Bobby Jane. And I mentioned that the S&P is not the benchmark for a lot of these funds, because Nishant always gets mad at me when I say, like, why wouldn't I just buy the S&P? I get that it's different, but what is he benchmarking? Because his multi-strategy hedge fund in its first full year of trading was up, but only 3.7%, which doesn't seem like very much.
Right. So when you look at the multi-strategy funds, I wouldn't quite use the S&P as a comparative benchmark, but 3.5% or 3.7%, not great for a multi-strat fund, or really for any fund. Typically with the multi-strats, you expect about 1% a month. And we've seen the multi-strats, other funds, some of them do quite well, up high teens. But 3.5%.
Which is what, like Izzy Englander, Ken Griffin?
Well, Izzy, so Millennium and Citadel didn't do as well as they've done in the past. But if you look at D.E. Shah, for example, they're up 20-something%. So that's a very strong return. The focus when you look at Bobby Jane is his first full trading year. In the first sort of year, 12 months from when they actually launched, they also were up about, I think, 5%. So the numbers since their debut haven't been that impressive. Keep in mind, though, it's expensive to launch a multi-strat firm the way he's done it. And so the costs may be impeding the return. Perhaps the gross return was more impressive, but it does show you how much of an impediment the costs of launching a very big multi-strat, a very complicated fund, can eat into return.
Is that very rare, then, to do a launch of that sort that's big and complicated? Do most people start with something smaller?
Historically, the multi-strats have started with one strategy, if you look back 20 years, and then they add on to a few strategies, and then adding on to it over time. Bobby's idea was, you can be a lot more thoughtful and intentional when you launch one fund that does many things all at once. The systems can work together. Investors can have a clear idea of what you're actually investing in. And so there are pros and cons, but it is a difficult way to launch a fund that is inherently very complicated. Multi-strats just are.
Hema, fantastic reporting. I'm looking forward to your continued coverage of what the hedge fund giants have been doing and did do in 2025. That's Bloomberg hedge fund reporter Hema Parmar. Coming up, Nancy Tengler of Laffer Tengler calls 2026 a time to reap as the bull market persists. She's going to join us next. You're watching Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on in the stock market on the second day in the first full week of trading for U.S. stocks. S&P 500 actually gaining on the cash trade, solid ground. 69.20 may be, Dani, correct me if I'm wrong, this could be the all-time high for the S&P 500. This morning, of course, President Trump said all U.S. stock markets have just hit an all-time high, and that was, of course, wrong for the S&P 500. They hit this level a couple of weeks ago.
You need 8 more points to be specific from where you currently are to get to an all-time high.
Okay, but it could happen. I mean, maybe his tweets are predictive. The NASDAQ 100 also hasn't hit its all-time high since, I believe, just before Halloween, but it's up now 0.6%. So it's also headed that direction at 25,542. Take a look at, so the small caps are down. The Dow Jones did hit an all-time high. Copper also hit an all-time high. The commodities have been fascinating to watch. NYMEX crude up 58.57, and Brent up as well, as we all follow what's going on in not only Venezuela, but also in Iran. Nvidia is, I guess, the story of the day outside of geopolitics because of Jensen Huang's statements at CES. Jensen Huang is going to join Bloomberg Television a little bit later, 1 p.m. if you want to see that interview. Lisa Su at AMD is going to join us at 11. So we have the biggest names out of CES joining Ed and Caroline on Bloomberg Tech. Ford Motor Company is doing a whole lot of nothing right now, but a number of car makers have come out with car sales numbers. GM seems to be doing the best in terms of 2025, up 5.5% over 2024. In general, the average is a gain of about 2% according to Cox. Vistra Corp up 3.5% after a purchase, I think a $4 billion purchase of some gas companies. And then Vertiv and Comfort Systems actually down 3% and 7% respectively because of, I guess, the Vera Rubin chips require less cooling, less power management, and these companies do that for data centers. So I gather, Dani.
Interesting. So some big moves there. Let's stick with tech, Matt, because Nancy Tengler, Laffer Tengler, CEO and CIO, is bullish heading into the new year, writing, if you are looking for earnings, look no further than the tech sector. Rumors of the death of technology are greatly exaggerated. Nancy joins us now. Nancy, so wonderful to see you in the new year. Happy New Year. You also write, time to plant, time to reap. 2026, year 4 of the sustainable bull market, will remain a time to reap. Okay, when I think of reap, I kind of think of selling and taking profits. I'm guessing you're saying that profits are going to keep coming, so stay in this market.
Happy New Year, Dani. Yeah, I am. I borrowed the phrase greatly exaggerated from Mark Twain, and the birds borrowed the turn, time to reap, time to sow from Ecclesiastes. So all good things get repeated over time. And I think that's where we are in this market. Don't expect a straight line up, of course. We think there'll be a lot of volatility. You even saw it this morning with the Nvidia announcement where the stock sold off initially and now it's on the rise. So I think you have to let investors settle in. They will accept the fact that this is a technology, AI that is in the early stages of transforming this economy. And an economy in transformation like we saw in the 90s is a powerful time to be invested in stocks.
You are invested in a specific number of stocks that you believe are going to outperform the rest of the market. Is the rest of the market, though, Nancy, going to catch up this year? Are we going to have a broadening out as so many people have been forecasting?
I think we've had a little bit of one, Matt, and we started to broaden out our exposure to some of the data center builders last year. Consumer discretionary became an overweight. Financials, but with an AI bent. That's our theme, old economy companies that are utilizing the new technologies. But I think you have to look at earnings. They are the mother's milk of stock returns. And it's still going to come from technology in a very big way. And we're seeing muted job growth. We call that productivity. It's been muted since 2020. We're 5% below the 2020 jobs numbers. But earnings have soared, and that's been led by technology, and it's going to be continue to be led by technology. Sorry.
Nancy, a little bit of a left field question, but I was just looking at a headline from New York Times Dealbook that Kalshi, the predictive market site, has hit $100 billion in annualized trading volume. There's been so much happening with prediction markets. You're a traditional active manager. Is there ever a point where you think, maybe this is something I should offer clients, a predictive market trading strategy?
That is from left field, Dani, and I like it. It's a great question. So we do adapt. I mean, we're not dinosaurs. We launched a thematic portfolio last year that's focused on what we think will be the next level of transformative technology. So think space, robotics, nuclear, quantum. And then we have materials in that portfolio and particularly the materials needed to drive those technologies. So we do adapt. I think predictive products for our clients, we'd rather hire someone else to do that, which we do from time to time. So we are announcing a new partnership in our mid-cap strategy with someone you know very well, and we will do that when it makes sense for our clients.
With whom?
B Squared.
B Squared. All right, interesting stuff. Listen, Nancy, we're going to keep you with us because we're thankful that we have more time with you. Talk about not only the outperformance of your 5 for 25, but your 6 for 26, the one new pick that you're adding. Nancy Tengler of Laffer Tengler is sticking with us, and we're waiting for President Trump to deliver remarks to the House Republicans. This is Bloomberg. We are 30 minutes into the trading day and looking at gains, getting closer and closer to an all-time high on the S&P 500. I'm Matt Miller.
And I'm Dani Berger. That's right. You need to get to 6,932 to be at an all-time high. We're at 6,927, so we might get there today.
Yeah, coming up and maybe helping to push us further is Nvidia. It says production of its next-gen AI chip is on track, but there is competition in the wings. We are live from CES in Las Vegas.
And that bull market alive and well, despite mounting geopolitical risks in Venezuela, Greenland, and Taiwan.
And in just a few moments, President Trump speaks. House Republicans at the Kennedy Center will be listening. You can see them gathered there in front of 6 American flags. We're going to bring you those remarks as soon as they kick off. The first in this trading week since the capture of Nicolas Maduro.
And a nice teaser from Press Secretary Caroline Leavitt saying, tune in, a conversation you don't want to miss. So we'll see what he has to say in just a moment's time. But first, we begin in Las Vegas, where the world's top AI executives are unveiling new products at CES, including chips to power autonomous cars and robots. Jensen Huang and Lisa Su say that demand is not slowing.
The amount of computation necessary for AI is skyrocketing. The demand for Nvidia GPUs is skyrocketing. The race is on for AI. Everybody's trying to get to the next level.
With all of that user growth, we have seen a huge surge in demand in the global compute infrastructure. We don't have nearly enough compute for everything that we can possibly do.
Bloomberg Tech's Caroline Hyde joins us now from CES. Caroline, Jensen Huang's announcement that Rubin data center processors are in production, demand is strong. Is any of that new? Are we surprised by any of it?
He's got to keep that acceleration feeling going. He's got to vindicate to the market that there isn't enough compute, that they can still have the scale of market share that the market needs them to vindicate an up to $5 trillion market capitalization. He's felt that pressure all at the end of last year. We were talking about TPUs, about Meta turning to Google, about all these other ASICs, these chips being specifically designed for the key hyperscalers that are his clients. But he's saying, look, my run rate is just phenomenal. The market is not understanding my rate of innovation. The fact that the Rubin is going to be there in the second half of 2026, maybe even as soon as the second quarter, you're hearing already that the next innovation in terms of the most sophisticated chips that can do 3.5 times as fast when you're looking at training a model, 5 times more powerful if you're looking at actually using the AI software, that Rubin's going to be in hands and deployed because he's got 6 of the chips back from manufacturing partners already. That is what the market needs to hear. They need to hear that that run rate is really on. And you're seeing the competition also coming from Lisa Su and AMD unveiling a new chip themselves when it comes to the smaller corporate data centers where you want to having data on site, on-prem. But this really is a battle that is fierce and furious right now at a consumer tech show.
You know, the first thing it makes me think about is depreciation, right? If I just spent so many billions on Blackwell chips and now here comes Vera, what am I to do with the assets I'm sitting on?
So true. But still, it feels as though they've said time and time again, your worries about depreciation, they're not vindicated. In fact, they're using their 3-year-old innovations still at full run rates in data centers. And more broadly, he's trying to say that demand is there across the wall. Look, H200's talking about the pickup that there's going to be in China for that particular chip if those licenses get through and they're signed off by the United States. Still, we need to hear whether Beijing wants to use them. But we heard both from Colette Kress, who is the CFO, and indeed from Jensen Huang, the CEO of Nvidia, saying the China demand is real. H200s are coming thick and fast. And I think that they've tried to put to bed before that worry or anxiety that suddenly you're going to cancel your Blackwells or your previous iterations. People just, the scale of compute is so huge that people will get their hands on anything that they can take right now.
All right, Caroline, really appreciate your reporting, and I look forward to your program. Caroline Hyde from CES in Las Vegas. She and her co-host Ed Ludlow are going to speak with a number of heavy hitters throughout the day, and that does kick off at 11 a.m. with Lisa Su. Of course, at 1 p.m. we get Jensen Huang as well, and so it'll be interesting to see the competitor interviewed before the godfather of AI, which is what Dan Ives always calls him.
They would make the argument that there's enough demand to go around, that the pie is big enough, so maybe they're not direct competition.
Well, I want to ask Nancy about this as well. Let's bring back in Nancy Tengler, Laffer Tengler, CEO and CIO. What do you think about the depreciation of these assets, Nancy? I think it's been an argument put forth by Michael Burry that, after you spend all of these millions or even billions on Blackwell chips, 6 months later, here comes Vera Rubin, and it's 5 times faster and 3 times cheaper to run. Like, is that a concern for you that these assets are going to depreciate faster than a Mercedes?
Well, I do think it comes back to Caroline's point about demand. And yeah, of course, it's always a concern. I think Michael Burry has hyped it pretty effectively to his own advantage. But remember, too, there's multiple facets of AI. So there's training, there's inferencing. And so some of these chips will get recycled. And that is what we've been hearing. They'll get used, Matt, I believe. The depreciation question is for the accountants, but it looks like so far, even Oracle, the poster child of depreciation problems, is right in line with what auditors are recommending in terms of how they're depreciating their chips. So we will see. I don't think it is the story you want to focus on in this particular aspect of AI growth and demand, because we still are in the early stages.
Nancy, when it comes to your picks for 2026, you have your 6 for 26, but you've talked about one that you maybe are thinking of adding. I don't know whether that means it becomes 7 for 26 and if that still works, but it's Google and Alphabet. What are your thoughts on the company and why it might enter your top pick list?
Well, so it is a member of, it's one of our largest holdings across all of our strategies. The interesting part, I think, is that we added it, Dani, to our value portfolio in August of 2024 when everyone was convinced that AI would decimate search. And in fact, we thought it would augment it. The company has shown that. And so we're up about, 80+% just in that purchase over a very short period of time. And it's still pretty cheap. So every portfolio manager loathes being asked the question, what's your top pick? So we always try to give you a few. If I could put 7, it would be Google. We've owned it in growth for 7 years. It's up 500% for us. So we think the company knows how to execute, even after the big stumble on their first AI announcement. None of us remember that very well. And so they've really been able to recalibrate and show that they can grow this business as well as their other businesses. Last quarter was their first $100 billion quarter. And that's a landmark that we noted.
I remember it. I remember worrying that Google's AI would become sentient, or had become. Not yet. Nancy, I'm looking at Google stock, and over the long period, it just really does go up and to the right. There was a little bit of stumble with everybody else in 2022, but otherwise it's taken off. It's gone hyperbolic in the last year. How do you hedge in case, something that goes up this steeply must also have a pretty sharp fall when that happens?
So actually, Matt, we did hedge our portfolios in February of 2020, but we did it across the board. And it wasn't because we knew, it was luck. Valuations were getting lofty. We couldn't find any cheap, new, good ideas. And we were concerned that we were overvalued. We run taxable assets. So it's not like we can liquidate the whole portfolio because of tax concerns. So we built in a hedge. It was a simple hedge. We bought puts against the SPY. We don't think we're there yet, but we are very disciplined about taking gains as stocks become overvalued. So we don't just ride them all the way up. We trim them back. And if you just think about the opportunities you get, look at April of last year, March of last year, we were buying Palantir in the 80s. We were buying Nvidia in the low 100s. We bought Tesla at 240. That is the ultimate hedge. You buy when these stocks get clobbered if you still think the catalyst is there for future outperformance. And so that's how we've been able to generate excess return over the S&P these many years.
It's a good look forward into this year, Nancy, but just a quick look backwards. You're 5 for 25. They all did very well except for one stock, and that was ServiceNow. That had a rough go of it, falling 27% in 2025. It's one of these companies that there are so many questions around with AI. Are you going to see enterprise software companies completely disrupted, business models, pricing strategies? Can you still touch these types of stocks when there's this big unknown with how new technology disrupts the market?
Well, and I think that's a question for a company like Salesforce more than it is for ServiceNow. Think of them as the control tower on the AI control tower in cloud computing. I think that they got painted with the same brush as the software is dead narrative. Bill McDermott is a pretty savvy guy. I think he's one of the best CEOs in Silicon Valley. He's making acquisitions like he did at SAP. They're not being rewarded yet. The company is growing in the enterprise space, decelerating, but still above 20%. We think this is one of those times. It's a Google moment. It's an Amazon moment from a while ago. It was a Tesla moment from earlier this year, where you just take a deliberate approach to adding to your holdings. The good news about a portfolio is you can have a stock like ServiceNow.
Nancy, unfortunately, I have to cut you off because the president is walking out to address House Republicans. Let's go right now to Washington, D.C.
Thank you very much. I do love that song, but we got to get to business. I love that song, but I want to thank you all. You're special, special people. And I want to just say that, I announced I was coming over here, and I said, I love those Republicans, and I meant it. I said, except for maybe a couple I don't love. But the people in this room, I don't know if those couple are here. I don't know. I don't care if they're here or not. But we love you, and you've done an amazing job. You love the country. You're doing what's right for the country. And I want to wish everybody a Happy New Year, the most successful House Republican majority in decades. And we did it with not a big majority, right? That was not a big majority, but it's a unified majority, and it's people that know what it takes to make America great again. So together we had 12 months of unprecedented success in 2025, and now we're going to make history and break records with the epic midterm victory that we're going to pull off. It just doesn't seem to happen for people that win the presidency. It's an amazing phenomenon. You win the presidency, and we sure as hell are having a successful presidency, I will say that. But even if it's a successful presidency, there's been nothing like what we're doing. We had a very good day 2 days ago, too. But even if it's successful, they don't win. I don't know what it is. There's something psychological, like you vote against. You can win by a lot. We won every swing state. We won the popular vote by millions. We won everything. But they say that when you win the presidency, you lose the midterm. So you're all brilliant people. Most of you are in this business longer than me. That makes me smarter than you. Because look where I am, right? No, it doesn't. But I wish you could explain to me what the hell's going on with the mind of the public, because we have the right policy. They don't. They have horrible policy. They do stick together. They're violent. They're vicious. They're vicious people. And they stick together like glue. They don't have a couple of the people that we have. A couple of people, not too many, really very few. And that's why I want to just say that before we go any further, I want to express our tremendous sorrow at the loss of a great member, a great, great, great member, Congressman Doug LaMalfa, who passed away yesterday, as you probably have heard. And he was the leader of the Western Caucus, a fierce champion on California water issues. He was great on water. He wanted, release the water, he'd scream at him. And a true defender of American children. He was a defender of everybody. And our hearts go out to his wife, Jill, and his entire family. He voted with me 100% of the time. And by the way, he wasn't a 3 o'clock in the morning person. Do you know what I mean by that? Where the speaker goes, sir, could you call up? Could you call? I said, what time is it, speaker? Sir, it's 3 in the morning. Could you make a couple of calls? How many? 9. So I'd start calling 3 in the morning. I said, I shouldn't use any names. I'm just going to create problems. But hi, Jim. And I'm not talking about Jim Jordan. I never had a call 3 in the morning for him. But I said, hi, Jim. How you doing? I just called to say hello. 3 in the morning. Okay, sir. Sir, you haven't spoken to me in 3 years, and it's now 3 in the morning, so I know what you want. You want my vote? And usually almost always they'd give it. But they wanted to be called. And with Doug, I never had a call. He was with us right from the beginning. I love those guys. I must say I probably love them the best, you know, the guys that I don't have to call. They know we're doing the right thing. I have a couple that are going to be with us all the way, but they just want the call. They want love. They need love. They're more insecure than a lot, most of you. It's true. No, most of you are secure people. You're all laughing. No, most of you are secure people. I had a couple say, look, I could have Trump call me all the time. I just have to break his ass a little bit. And he'll be calling. But I appreciate those. We actually had a little party. We opened up a beautiful section of the White House in the Rose Garden, and we had a party for all of those people that I never speak to and vote for me. And, you know, I spoke to Doug, but I didn't speak to him about, never had a problem. And I was really saddened by his passing and was thinking about not even doing the speech in his honor. But then I decided that I have to do it in his honor. I'll do it in his honor because he would have wanted it that way. He would have wanted it that way. He would have said, do that speech. Are you kidding me? Do the speech, big guy. But he was a fantastic person. Man, that was a quick one. I don't know quite yet what happened, but boy, it's a tough one. He was just with us. He was our friend, all of us, every one of us. And I also want to send our best wishes to Congressman Jim Baird and his wife, who are recovering from a car accident. They're going to be okay, but they had a pretty bad accident. And we're praying that they get out of that hospital very quickly. He's going to be fine. She's going to be fine, but it was a bad accident. And I want to thank the man who has been central to so many of our triumphs. He really has been. He's the guy that would call me to make those calls all the time. He's always working. And he's a nice person. You know, he's a high-quality person. But I want to tell you, he's a very tough cookie. I've seen both sides. Not often do I have to see the other side, because he's just, by nature, he's a very fine, religious. I like that. He's a religious person. I like that. I like religious people. It usually means they're more honest. Sometimes it doesn't happen that way. I've had some real religious ones that did numbers on me, and I said, I'm going to get them someday. They got me by surprise, but it's usually good, okay, right? And his name is Mike Johnson, Speaker Mike Johnson. He has my complete and total endorsement. Stand up, Speaker. So, you know, but it is true. A lot of times they'll say, I wish Mike were tougher. He's tough. He's tough as anybody in the room, actually. But can't be tough when you have a majority of 3. And now, sadly, a little bit less than that. A little bit less than that, maybe. But you can't be Trump. You can't, I warned you. You know, you make 10 enemies, 20 enemies. That's the end of that, right? Everybody loves him. I would say there's one person he's given up on. I think he just gave up on this guy. He's so bad. He never votes for us. But no matter how good, he won't vote for us. There's a sickness there. You know, there's something wrong. You can have the greatest bill, the greatest for the country. Forget about for Republicans. Great, great, great for the country. I'm a no vote. We don't even bother calling him at 3 in the morning, do we? Huh? But I want to thank another guy who's as tough as they come, because he went through something that none of us have gone through. I went through a little shot, but I get that throbbing feeling every once in a while. But what he went through was incredible. And that Steve Scalise, he got hit hard. Where's Steve? Steve. He's a tough cookie. He was dead. I went to the hospital. His wife was crying so much. He was a mess. Oh, yeah, she loves you. That's the only thing I learned about Steve, that he has a wife who loves him. Because I've gone to hospitals where guys are in bad shape, and the wife couldn't care less. She's waiting. She's looking for the next guy. Who's the next guy down the pike? Who the hell is the next guy? He's died. I said, it's so bad. Oh, yeah. I had one where the dog died.
All right, that was President Trump speaking at the Kennedy Center. 2 House Republicans there. Let's bring in Bloomberg Washington correspondent Tyler Kendall. She joins us now, and this is Tyler, the president's first address, on television since the capture of Maduro in this trading week. We expect him, I guess, to get to those details at some point and get to more strategy at some point. Right now, he's just sort of, I guess, regaling stories of other Republicans in the House, thanking them for their service and commemorating those who we've lost.
Right, exactly. So President Trump is speaking to a House Republican retreat. This was previously scheduled before the developments in Venezuela unfolded over the weekend. So the original intent of this speech was to rally House Republicans as they head into the midterms. Now that it's 2026, we're starting to see the parties align their strategies as they go into campaign mode. But no doubt, Matt, you're exactly right. We're going to likely hear from President Trump. He alluded to it sort of at the top there about additional details when it does come to Venezuela. As yesterday, we saw House Republicans begin to be briefed about the operation, and we have just confirmed today, actually this hour, Senate Republicans and the full Senate actually is expected to be briefed with additional details.
Tyler, thank you so much. That's Bloomberg's Tyler Kendall, and we'll keep an eye on that speech that Trump is giving and whether any headlines come out of it. You can also watch the rest of the speech in real time at LiveGo on your terminal. Let's turn now to our credit segment. And 2025 delivered extremes for private credit. Assets and deals grew, but investor confidence cooled as rates stayed high as risks rose. We're going to get more on private credit. Joining us now is Steve Klinsky, founder and CEO of New Mountain Capital, an alternative investment firm worth over $60 billion. Steve, thank you so much for joining. And I know, listen, you're also one of the OGs when it comes to private equity, so we're going to get to that first. But I want to start with private credit because there does feel to be, heading at the end of 2025 into 2026, a real angst in the sector, a real angst in the asset class. How are you seeing that play out among your LPs? Have there been more questions raised of, are you doing the necessary due diligence? Are there areas I should be worried about?
Yeah, well, with our firm, we have a publicly traded vehicle called New Mountain Finance Company, and we've been very transparent since we started it in 2011. We show loan by loan and the cash flow multiples. We have green, yellow, red lights. So 95% of our positions are green. Our loss rate's been extremely low for many years now. So we haven't had any particular issues like that.
Why do you think the publicly traded BDCs, though, have done so poorly, did so poorly in 2025? And what do you expect for 2026?
Yeah, I mean, personally, I think they're oversold you get individual loans like there were the two asset-backed loans that went bad that were not BDC-style loans to begin with. Some people don't know what sort of loans are on what books. So I think.
Well, now that Mark Rowan's been writing about it, we all have been educated.
That's right. Well, he's good at that. So, I mean, I think it's like anything else. The market will figure it out, and I'm hopeful for the space. And, I'm a major owner of my own stock and a buyer, not a seller. So I think it will all work out.
Bloomberg Intelligence did a survey at the end of the year of both fund managers and investors. And for the investors, it was macroeconomic and rate instability that was the biggest threat. For fund managers themselves, their biggest threat was stricter regulation, which I realize there's some irony to that because with this White House, the anticipation is looser regulation. How are you thinking about the regulatory environment when it comes to private capital in 2026?
Yeah, I don't see any big cloud about government regulation against private credit. And I think the banks have gotten some regulatory relief from potential regulation, which could be good for them.
Isn't that maybe bad for private credit, though?
Well, it's a huge world, so it's not like, the big banks are usually competing for the very big syndicated loans. The complicated, higher-yielding $200 million buyout is probably not where they're set up to play anyways, and so it's not a one winner and one loser environment. I think there's room for everybody to do well.
I mean, the narrative at the end of the year in the public markets that we watch so closely is that the big banks have come back, right? And that non-bank lenders, because of what happened with the stocks, were out of favor. But you think that private credit has less structural impediments or less structural risk than the banking sector? How is that?
Well, I think private credit, if it didn't exist, someone would have invented it. I mean, private credit, our capital is locked up. It's not like you can't have a bank run on a permanent capital vehicle. We're less levered. Our capital's more stable. So And we have teams, like the way New Mountain works, we have 300 people at the firm. You know, we own private equity companies, and it's the same team that owns a private equity business is advising the credit manager, is it a good loan in the industry that they know better than any credit analyst could know. So, I mean, I think it's a very good space. I think you'll see deal activity pick up this year. I think that will be good for everybody in the lending market.
To that point, Steve, if I can jump in, because deal activity really picked up in a big way for buyouts last year, and for private equity, perhaps your favorite child, given your career history. But what we saw pick up was like these big mega cap deals. Do you think there's more space for a broadening out of private equity, or is all the action still going to be in high quality, large cap deals?
No, I think you're going to see a lot of action in regular way private equity deals. I think it's already started under the hood. And I think you're going to see a lot of buying and selling of private equity companies in the traditional way.
Hey, Steve, great to have you here. I hope we get you back at a time when the president isn't speaking to House Republicans, because that's
I get it.
That's the focus of a lot of people right now. But yeah, hope we can get you back. Steve Klinsky there of New Mountain Capital. Appreciate your time and your forthrightness there on the industry. President Trump is speaking at the Kennedy Center, and right now he is telling the story of the capture of Maduro, saying that the U.S. had a lot of boots on the ground, and saying that a lot of Cuban soldiers were killed in the raid in Venezuela as well. Let's listen to break, and you can check it out if you want on your Bloomberg terminal by typing LIVE GO.
A little bit. But he's a violent guy, and he's killed millions of people. He's tortured. They have a torture chamber in the middle of Caracas that they're closing up. But he's tortured people, and now what they do, the radical left, they actually have people, and it's hard to get them. They're all paid people. Most of these people are paid. You know they're paid when they have brand new, beautiful printed signs by like the highest quality printer. Sir, we're off by $39 billion. Oh, is that good or bad? Meaning, do we have it or are we short of it? Sir, it's $39 billion that we can't account for. That means we have an extra 39. Yes, sir. I said, well, what are you saying? We just don't know where it came from. I said, check the tariff shelf. Sir, that tariff doesn't start until September. He said, no. It started about a month and a half ago. Check it. Comes back 25 minutes later. Sir, you were right. It came from tariffs. This never happened to us before, where we find plus 39 billion, not million, plus 39 billion. They were missing. We've taken in $650 billion or shortcoming, and that's because I'm being nice. If I want to be, and we have national security because of tariffs. And frankly, we have a big Supreme Court case. I hope they do what's good for our country. I hope they do the right thing, where the president has to be able to wheel and deal with tariffs. Now, if you have the right president, it's good. You have the wrong president, if you have the wrong president, nothing's good. Tariffs are the least of your problems. We found that out. For 4 years, we had the worst president, did the worst job. They had the worst policy. We have to even run against these people. Now, I won't say cancel the election. They should cancel the election because the fake news will say, he wants the elections canceled. He's a dictator. They always call me a dictator. Nobody's worse than Obama and the people that surrounded Biden. Not Biden. I don't think it was Biden. He didn't know what the hell was going on, okay? The election was rigged. He had no idea what happened. He still doesn't. The auto pen. And by the way, you ought to make a big deal out of the auto pen. The auto pen was your president because most of the things were signed by auto pen. And you're not allowed to do that. I signed very little. Now I just sign everything because it's just so crazy. But, like I had the other day, we elevated a general to 4 stars. I think you should sign that. That's a big deal. A general did a great job, was elevated to 4 stars. And I had the general in, and I signed it in front of him, held it up. You got to sign that. You can't give it to an auto pen. And you can always tell an auto pen. One thing, it has 2 little tiny dots. You know that? 2 little dots. You know what that's from? 2 pins. They go bing, bing. They're wonderful things. But you got to sign it. And the law is you have to sign it. If somebody's, telling the auto pen person, he has to be authorized by the president of the United States. Well, he wasn't. The guy barely knew the president. How many times did you speak to the president, right? He said 2. And they just spoke about the weather. It was like this. But he was never authorized to sign. And I think it's, 95% of the things were signed by AutoPen. You can tell because the AutoPen is a nice, clean signature, and his signature is a mess. The only thing he signed was, which is nice, was Hunter's pardon. That's the only thing that we can find that he signed. Most of it he didn't sign. So somebody's sending papers to sign, and he wasn't the president. First of all, the election was rigged. You ought to have voter ID. You ought to insist on it. You ought to insist on it. Can you imagine? In California, they not only don't have voter ID, but if an official at the voting booths, which they don't have, by the way, because it's all mail, if an official, a voting official, even asks somebody for voter ID, sir, would like to see your identification. Do you come from our country? They put him in jail for tampering with the election. Okay? We got to straighten this out before it gets too crazy. California is more corrupt than any place. California is more corrupt than Minnesota. And I won Minnesota. Well, Tom's going, I think so. Well, it's close. It can't be proportionately, probably nothing's more corrupt, right? We got to win something. Yeah, right. He says you got to win. I'll tell you what, I did great there 3 times. I was surprised 3 times. Those elections are corrupt. They got you 1 time, too. But I heard a long time ago, but they got you. But they got to straighten those out. But we have to have voter ID. And, you know, when you confront a Democrat about voter ID, like in a debate or something, I said it a couple of times with Biden, and they're very embarrassed when they say, we want voter ID, voter identification. The only reason somebody doesn't want that is because they want to cheat. Our elections are crooked as hell. And you can not only win elections over that, and not only win future elections, but you'll win every debate because the public is really angry about it. And that
was President Trump speaking at the Kennedy Center. He is talking right now, well, he was talking a bit about defense and saying that it takes too long to get weapons made. He says the U.S. is going to start producing weapons more quickly, and that he's going to be very tough on defense companies. These companies rallied in yesterday's market. We saw Lockheed, we saw Raytheon up this morning. We should take a look at those stocks as well. He made some comments about the F-35 as well as the Apache helicopter taking too long. And, of course, everyone knows the F-35 saga. We're going to continue to keep monitoring these comments out of Washington. Let's get to Washington correspondent Tyler Kendall right now. So President Trump, Tyler, talked these House Republicans through the raid in Venezuela, made comments on the casualties as well as boots on the ground and the weaponry that we used and that we need.
Right, exactly, Matt. I mean, he confirmed some further details. We had heard from the Joint Chiefs of Staff over the weekend that there was 150 aircraft involved in this raid. He spoke about how they were able to turn off the electricity in Venezuela in order to make this mission possible. But then, as you're talking here, he highlighted some of these defense companies. We know that revitalizing the industrial defense base has been actually a bipartisan movement that spanned multiple administrations to try to get weapons procured faster. That's actually part of why sometimes we've heard Republicans talk about this idea of sending weapons abroad, because they want to build up our own stockpiles first. Also worth mentioning, he pointed out Boeing and his relationship with the company. Bringing up Boeing, this could actually be a good segue into some of the other headlines that we got here when it came to trade and tariffs, since we know that this administration has often used Boeing orders in their trade negotiations. But President Trump saying that he hopes that the Supreme Court will do good for our country, of course, alluding to that high-stakes Supreme Court decision that we are waiting for when it comes to the legality of his tariffs imposed under IEEPA. President Trump here talking about how he thinks that he has that executive authority to invoke tariffs through this way, which has never been done before. That's probably one of the biggest themes that we're going to be watching closely in the weeks ahead, Matt, as we are expecting that decision to come down and could have some pretty big implications on what trade relations look like ahead.
I wonder also if I could just ask about the AutoPen comments. How are those received in Washington? Are many politicians seriously concerned that President Biden didn't sign a lot of legislation. Is that something that goes beyond the White House and extends into the halls of Congress?
So it is a good question because it is something that often does come up with President Trump, right? He has even floated the idea that this could potentially impact Federal Reserve nominees. But experts tell us that they're really not expecting this to actually result in any sort of changes or legal action down the road. But just to put into context here, of course, President Trump right now is speaking to a House Republican retreat. This is designed to try to rally support, rally momentum among House Republicans, particularly considering that they just had a slew of election losses in November, and the party's been really trying to find their footing for strategy moving forward. As of this morning, Republicans now have 218 to a 213 majority. That means that their margins are down to 2 votes. It is going to be very slim as we head in to the elections later this year. So I would expect perhaps more rhetoric from the president in terms of trying to rally that base.
Tyler, thank you so much. That's Bloomberg's Tyler Kendall in Washington, D.C., and you can watch the rest of Trump's speech in real time at Live Go. Now, another issue near and dear to the president's interest, the battle for Warner Brothers Discovery, that continues into the new year. Sources telling Bloomberg in the past week that the company plans once again to reject a takeover bid from Paramount. Kay Koplovitz, Springboard Enterprises co-founder and the founder of USA Networks, says Netflix is the front runner, writing either way, Warner Brothers Discovery is likely to get increased offers as the duel continues. The prospects are that this process could see a long court battle before it is over. And I'm pleased to say that Kay joins us now. Kay, we got the first hints of maybe how much some of these assets are really worth. With Comcast yesterday, its spinoff finally trading in the market, Versant Media plunged 13%. Just given those comparables for Warner Brothers Discovery's cable assets, how does that change the math of this deal?
Well, a lot of people are saying that it values Paramount more readily than Netflix, and the decreased pricing of 13% after the open yesterday. But there's also sell-off, and I think that, a little bit longer term, you'll look at it and say, is it going to continue to be devalue? Let's be clear. The media industry, the communications industry are going through big changes everywhere, and all the program networks, the linear networks that were developed in cable television, USA and Sci-Fi, ours as well, are changing. People can watch just about anything they want to watch at any time they want to watch it today. Maybe breaking news and sports are probably the only 2 things that people really feel that they need to really look at something in real time today. So the markets are one thing people do look at real time, but most of the other product out there, from television networks, broadcast networks, cable networks, people can watch them at any time. And that was really changed by Netflix coming into the marketplace and streaming and dominating streaming as it does today, domestically and internationally. So they're the front runner. The board is a very experienced board of Warner Brothers Discovery. They will, I'm sure, be considering all options, but right now it's Netflix. And if Paramount thinks they're going to, upend that decision, I think it'll have to be, very aggressive to do that. And people assume that Larry Ellison, one of 4 or 5 richest people in the world, can put up any amount of money that he wants to try to make this happen. But he has restrictions too, not for Oracle, but for himself. I know Larry. I was on the Oracle board 20-some years ago. He's very aggressive. He's behind his son, David, clearly, fully, really a friend of the president. But I think that the board of this company, Warner Brothers Discovery, is fully behind the offer from Netflix at this time. So I really think, we may see a long-term battle here. I don't think it's going to be over shortly. I'm still in the camp, unlike a number of people I know in the media business who say eventually it's going to go to Paramount because of the offer of cash from Larry Ellison, one thing that was negative for them, but also an untrained or unskilled in the media business and the television, in the movie business, by David Ellison, who's been making movies, who does support the creative community, but is learning the process, as opposed to Netflix that's been out there for years in leading creative development.
You know, when I speak with,
you know, we have a way to go here.
Okay, when I speak with Paul Sweeney and other, you know, seasoned media experts, they say for Paramount this is a must-have asset, whereas for Netflix it's a nice-to-have asset. So isn't it inevitable that Paramount raises its bid?
I think they will raise their bid. Is it inevitable that they will raise their bid from where they are? I wouldn't put it in that category. I suspect they will, but is it a foregone conclusion that they will pay any price to get it? I'm not necessarily in that camp.
Hey, Kay, as you say, you know Larry Ellison well. You know the business of Paramount very well. I wonder what you make of this media empire that Larry Ellison and the Ellisons seem to be building with not just Paramount, not just a bid for Warner Brothers Discovery, but with TikTok too. What do you think are behind? What are some of the motives of the Ellisons going after these very prized media, new media and old media assets?
I think that Larry Ellison is supporting his son, you know, fully on this run and wants to have a dominating position in the marketplace. Control of media assets, not just television networks, not just two studios, but TikTok and CNN. And I'm concerned. It doesn't mean anything with regard to the battle that's going on between the two companies right now, but I'm concerned about restriction of free speech in the media. I think we are in a very dangerous area right now of such consolidation in the media that, and there's a lot of pressure from the administration to eliminate people that have different points of view in the media. And I think for me, being a media person originally, a television cable person, not a movie studio person, but I'm really concerned about what people are allowed to say, what they can say, how they can present different points of view without being punished. That is a fundamental right of freedom of speech in this country. And I'm really concerned that that there is too much consolidation in the marketplace.
Kay, great having you on the program. Hope we can get you back. Kay Koplovitz there of Springboard Enterprises, also the founder of USA Networks. Coming up, Richard Farley of Herbert Smith Freehills Kramer says the investment opportunity in Venezuela is huge. He explains next, right here on Bloomberg Open Interest. President Trump is addressing the GOP House membership retreat, where he took a victory lap following the raid that captured Venezuelan President Nicolas Maduro. Let's get more insight into the legal and business implications of Maduro's capture. We're joined by Richard Farley, Herbert Smith Freehills Kramer partner. Richard, the tease for you was that you say there's a lot of opportunity here. Yeah. It's huge. But as a lawyer, I'm sure you're concerned about, you know, the rule of law, the political stability of the country, and
that's a big issue here in terms of making that opportunity a reality, right? You've had 27 years of Chavez, Maduro, most would say mismanagement of the economy, to put it kindly, and not exactly a traditional stable rule of law where people are just going to jump in and start making investments. So that all has to be established. And what's happening on the ground is very important, right? When the guys with guns are not going to court but shooting the dissenters in the street, it's a long way away from people deploying hundreds of billions of dollars. Now, the opportunity, and Charles Myers of Signum had a note saying he thinks it's $750 billion over the next 5 years if things can go according to an optimistic view. But you got some complications, right? They're in default on their sovereign debt since 2017. And if you look at what the analysts are saying, they think the principal is going to have to get written down by half or perhaps more in order to have sustainability. So that has to get resolved. You also have a lot of contracts with oil and minerals and other aspects of the economy with China. Now, are we going to honor those contracts? Are we going to try to abrogate them? What are the consequences of that going to be? I think that's going to take time, and it's going to be very complicated.
What would the consequences be if the U.S. decides in all of this that it imposes its will and in the capital stack of who gets paid first and the debt and the contracts that are being honored, that China just gets wiped out? What does that change if that's the decision that the U.S. presses for?
Well, you have courts around the world where those claims can be challenged, and reordering the capital stack can be challenged. And you also have, at the same time you're doing that, you're going to be asking the IMF and others to come in and have a plan, and have the private sector also adopt that plan. And it's easy to say we're just going to make sure you don't get paid. It's harder when the assets of the American government and private companies are located around the world, where China can come in and make claims. If they say the U.S. improperly reordered our claims, they may try to seize our assets.
How important, by the way, Richard, is the Southern District of New York in this? How important is the Maduro trial, or is it a sideshow to, the real story playing out?
Yeah, look, I think it's important because ultimately this is going to go in front of a jury, right? And think of the complications if he's acquitted, which is not, impossible. Juries do all kinds of things. What happens then? Does he get released? Does he go back? Does he have a personal damages claim against the U.S. government? I mean, there are all sorts of things here that are unsettled.
You know the judge, right? Hellerstein. He is the same judge, I think he's 92 years old,
Yep.
who oversaw the Bill Wang case.
Yep.
And he was pretty spicy in that case.
Yeah, look, he's a very experienced judge. He's a Clinton appointee, not really viewed as being hyper-political. So I think he's going to play it right down the middle of the fairway.
But with all these uncertainties, it gets back to where we started. How, as a company, would you take a punt on helping to rebuild Venezuela and helping to rebuild this oil infrastructure with all these question marks hanging?
Here's what you need, okay? You need a stable political environment on the ground, which means rule of law, which means a government that's functioning, okay? You need to have the debt restructuring moving along, right? And you have to have the support of the people who are going to be key players in the economy, which includes the unions, which for a long time have been very left-wing. So there's going to have to be a lot of things that fall into place. Now, I tend to think that greed trumps ideology over the long term. So I think when the people on the ground are convinced that we're serious about making the investment and the government's going to facilitate that investment, and the people with the guns say, hey, we can actually make some money here, it may turn around in a positive way, but there's no guarantees.
I wonder what you think about Ricardo Hausmann from Harvard argues in The Economist that they need to first ensure stability, democratic stability.
Well, those two things are not necessarily the same, right? You can have stability that's not democratic.
That's fair. That's fair. But his point is that you need to have the will of the people behind an economic development program, and he's an economic development professor at Harvard. However, we were talking with Marko Papic of BCA Research earlier this morning. He said he doesn't agree. He thinks you can first ensure economic development or, investment, for example, in the oil infrastructure there, and then go to a democratic transition.
Yeah, look, ideally you would get first the military behind you. Then you would get the elites and those who know how to run things behind you. And then you have the popular, in terms of a democratic government. Now, all those things can happen simultaneously, but the first key is obviously getting the military to go along with what your plan is, and the elites who have the know-how and the capital on the ground to run things. And hopefully at the same time, you can get a democratic process. Now, they did have an election recently, and they did have a winner of that election. I don't know whether at the end of the day that's going to be the horse that the Trump administration rides. Time will tell.
All right. Fascinating stuff, Richard. Great to have you in. Richard Farley of Herbert Smith Freehills Kramer talking to us about what to expect out of Venezuela in terms of the opportunity and the future stability of the regime there. We are still monitoring President Trump addressing House Republicans, and you can watch that on Live Go. Monitor the Bloomberg 4 headlines. We'll bring them to you, of course, as he says anything market moving. Coming up, we have special coverage of CES. Speaking of market moving, that kicks off at 11 a.m. with one of the most important CEOs in this AI revolution. Lisa Su is going to speak with Ed Ludlow and Caroline Hyde from Las Vegas. They are also going to speak to, as you can see, Roland Bush from Siemens, Cristiano Amon from Qualcomm. But at 1 p.m., as Dan Ives says, the godfather of AI, Jensen Huang, is going to join Ed and Caroline for an interview, and it will be absolutely fascinating as that stock is powering the market higher today.
So far, they've said that demand is healthy. Will they continue the bullishness with Ed and Caroline? I'd say the answer is probably yes. So that conversation to come in just a few minutes' time with Lisa Su, the AMD CEO, and you're watching Bloomberg TV.